Hey everyone, hope you're well and welcome to The Loft. Now today's video is going to be slightly different to the normal Tuesday stock news videos, and namely in the fact that, like the BBC announced in April of 1930, there will be no news today. Now this isn't because there aren't any stories worth going over or stories that I'd like to discuss, but more due to my inability to correctly write and record a video in the required timescale. As you can see, I've potentially had a bit of an accident last week, which let's say has at the least inhibited my ability to do some research. However, all of you are very important to me and your views are very important to me, and I don't want to let you guys down. So come hell, high water, lost limb or a bruised ego, I will do my best to ensure that videos come out on time every single week. Now, if I can just take a moment, I've been advised by my nurse at the treatment centre to ask for a like and a share, as it would help my hand heal throughout the next week or so, and it would generally stop it hurting if you do manage to subscribe. Obviously that's a joke, but it may not help my hand, but I would really appreciate it. So if you could do that for me right now, I'd be grateful. So due to the lack of news, I will be jumping straight into the portfolio update for the week, which may save you a few minutes of your Tuesday evening, and I just generally want to say thank you for being here to see what's going on. Let's jump straight in and we'll have a look at the overall change as per normal and how we normally do these reviews. And as we can see, my portfolio value has moved from £2,640 and a few pennies up to a value of £2,727 and also a few pennies. There has also been a change in portfolio return, moving from around 11.45% up to around 13.33%, which is about £320. In regards to purchases over the last week, there were only two last week, as it's been a relatively low free funds week for me. But I did manage to pick up one more full share of GSK and also a full share of Bunzl. If you're interested in GSK, I did do a video last Saturday, which you might want to check out, where I go through the company and explain basically what they do, how they make their money, and what I would personally value them at. And also, if you're interested in Bunzl, I will just quickly go over them. They're essentially a large distributor of medical consumables and equipment, and they tend to supply to places such as the NHS in the UK and some other private practices. Overall, I spent £37.11, with £24.03 of that going to Bunzl and the remaining £13.08 going to GSK. Overall, these purchases will hopefully generate around an additional £1.26 in yearly dividends for me, although I do want to point out that this isn't going to last for a long period of time, because GSK are due to cut their dividend as they are going through a company split where they're diversing their business out into essentially a consumable company and a research company, and through doing that there will be a drop in the dividend value. But as if I've almost planned it this way, I think that brings us nicely onto dividends, which has been a bit more active this week. Starting with the 6th, we had a payment from Coca-Cola with a total value of 90p. And they paid that out for the 3.5 shares that I currently hold. We also had £1.78 as a payment sent over from PPL for holding 7 shares. And rounding off that day, we also had Broadcom. Now they came in with a 22p payment, and I only hold 0.1 of a share of their company. And I'm really looking at buying some more Broadcom in the future, depending on the value at the particular time. On the 7th, we had the good old dinosaur mining company Royal Dutch Shell coming in with a total of 12p for the 1 share that I hold. And the rest of the payments for the week actually came in on Friday the 9th. Starting with Eastman Chemical, they chipped in with just below 10p for the 0.2 of a share that I hold. Then we also had Walmart, who sent across 2 whole pennies, but I do only hold 0.05 of a share of the company. And finishing off the day and the week, we had a 3p payment from Barclays for holding 3 shares. These payments have now pushed me over the £40 total return for my portfolio in regards to dividends. So for fun, I thought we would just essentially run this through a compound calculator and see what we could get out of this amount over a long period of time. So if we assume that we could achieve a 10% yearly compounding on this £40 over 20 years, it could grow to as much as £269. Which, while it doesn't sound like a lot, it's not millions and it's not thousands. Free money, making free money is always good, and I'm happy to have free money. Who doesn't like free money at the end of the day? Looking over to the worst and best performing stocks in the portfolio, we can see that currently the best return stock that I have is ITV, who have a return of 98.27%, which is followed by ING with a return of 96.10%. But I do feel that it's also important to look at the worst performing stocks so we get an overview of the whole portfolio essentially. And we can see if we look at the worst performing stocks that the worst number one stock in the portfolio currently is Hormel Foods, who are down 11.81%, which is followed quite quickly by Dominion Energy, who are down 9.5% in total. The other stocks that I am currently down on are Amgen, AT&T, BP, Bunzl, GSK, Pepsi, Verizon and Walmart, which out of 60 investments I don't feel is too bad. I will be looking at optimizing my portfolio over the next month or so, and this means that there may be some changes and some positions that I might sell out of completely. There is a chance that I'll buy back into them if the future price is right and I have a larger amount of capital, but some of these positions I only have about £1 in, and I don't feel that my money's being used as effectively as if I stuck it into another company that's got more capital in it. Though I will admit I am slightly unsure on this. It's mainly brought about, as I said, from my minimal positions such as Yum Brands, who, while they're up 17%, I only have 0.05 of a share in the company, and I feel that increasing other positions by diluting and removing these from my portfolio may actually optimize and help my portfolio's performance. But let me know what you think. Should I keep them in the portfolio even with the low physical return that is being received from them? Or do you think moving them into alternate funds and a more concise list of stocks might be helpful? Let me know what you would do down in the comments below and let's have a chat about it. As always, if there is anything that you want to see in these weekly updates, let me know. Next week, I'm hoping that I will have the time and that I'm not going to injure myself again, so I will include stock news in the video for next week, but I apologise that they're not present in this particular video. I do want to just give you a heads up that I am working on a project in the moment which I'm aiming to devise a brand new way of reviewing companies against companies in other sectors, which a lot of investors find quite difficult, and I've never seen this method used before at all. So make sure to subscribe so that you don't miss that, and let me know your feedback on it. Let me know if it's good, let me know if it's rubbish. It will be coming out hopefully in not too long. We are well on the way to 50 subscribers here, so that's amazing. That's generally awesome. And thank you everyone who has taken the time to watch the videos and subscribe. I'm thinking of doing giveaways as we hit certain milestones, and I would like to set the first milestone to 50 subscribers. So if we can push the channel over 50 subscribers, I will go and do the video around what we're doing for the giveaway. So please let me know if you think that is a good idea, or if you would rather just subscribe and not have a giveaway and potentially win some free stuff. Don't know why you would, but if you would rather do that, let me know. And until next time, remember to invest, save, and subscribe. So if you stayed this long, thank you very much. I don't normally do bits like this afterwards. I may occasionally do a blooper reel. But just in case you're interested, I thought I'd go over how I potentially incapacitated myself and bruised my ego a little bit. And the story is not massively exciting. I was woodworking. I was chipping away at a bit of wood for some reason with an axe. And what we've established is that metal axe and flesh-covered fingers don't mix particularly well. I managed to slice through my finger and into my thumb. Took a nice trip to our local treatment centre, and I was only there for about an hour, which was quite nice. They've splintered it, covered it in a load of super glue, and it all apparently will heal. If you are here and you are watching this bit of the video, I would like to know who you are. Thank you ever so much for your dedication and watching through my random thanks for watching bit at the end. And if you wouldn't mind commenting down below something, let's pick a random word just to confuse everyone that hasn't watched this far in. We'll pick daffodils. If you just drop any comment down below and just include daffodils at the bottom of the comment, I'll know you were here and I will thank you ever so much for staying with me. And you are one of the few people who know why my ego is bruised. So this is why I work in finance behind a desk and not in a workshop with wood and tools on a regular basis. Because apparently I'm more skilled with a spreadsheet than I am with an axe. And have a good one.